November 13th, 2025, detailed update and analysis of the Bitcoin and crypto market. On November 13th, 2025, the global cryptocurrency market is navigating a period of significant volatility. Bitcoin, BTC, has recently dipped below the crucial $100,000 mark, and the overall market capitalization has seen a slight reduction. A confluence of regulatory, macroeconomic, and technical factors is driving this instability, although long-term institutional interest remains intact. 1. Current market status, November 13, 2025. Here are the key metrics for the cryptocurrency market as of November 13, 2025. Bitcoin price analysis. Today, Bitcoin's price dropped after failing to overcome the resistance around $103,000. Analysts are cautioning about the potential formation of a head and shoulders pattern, which is a sign of a bearish reversal. If the neckline support definitively breaks below $100,000, BTC's price could further drop toward $90,000 or even $83,000. However, a strong recovery above $105,000 is also not impossible given the bullish sentiment, reflecting the market's high instability. Number 2. Major news and events. A. Major decline in spot Bitcoin and Ethereum ETF flows. The most significant news on November 13, 2025, is the massive $869.9 million outflow from U.S. spot Bitcoin ETFs. This marks the second largest daily outflow since their launch. Primary cause: uncertainty over the Federal Reserve holding interest rates steady and overall macroeconomic instability. Significance: institutional investors are shifting their portfolios toward risk-free assets in the short term. Grayscale's GBTC and other ETFs have lost a notable amount of capital. Altcoin ETFs. The spot Ethereum ETF also saw a $259.7 million outflow, indicating widespread market pressure. However, the newly launched spot Solana ETF, SOL, saw a small inflow, $1.4 million. XRP ETF launch. The launch of the spot XRP ETF, ticker XRPC, by Canary Capital on Nasdaq, which saw a strong first-day turnover, $58 million, highlights the growing appetite for new, regulatory-compliant crypto products. B. U.S. government shutdown ends and macro data delay. President Donald Trump signed the bill ending the 43-day-long U.S. government shutdown. This is positive news for the crypto market, as political uncertainty has been removed. Potential impact. Some analysts expect the end of the shutdown to decrease market uncertainty, potentially triggering a bull run toward 2026. Caveat: while the shutdown is over, the delay in the release of crucial U.S. economic data, especially CPI and inflation data, means the market is still stuck in a mix of fear and FOMO. C. Bitcoin dominance, BTCD, and the altcoin market. Bitcoin dominance currently stands high, near 62%. This indicates that a larger portion of the total cryptocurrency market capitalization is still held by Bitcoin. Typically, BTCD increases at the beginning of a bull market, as the majority of capital flows into Bitcoin first. Altcoins. With BTCD high, most altcoins, including Ethereum and Solana, are seeing their prices decline or showing less growth compared to Bitcoin. Data suggests that more than 80 of the top 100 coins are in the red. This signals that alt season has not yet begun. Traders are maintaining positions in the relatively more stable Bitcoin. Long-term forecast. Analysts predict that once Bitcoin hits its new highs and stabilizes, BTCD will begin to decrease, leading to a full-fledged alt season. Some even forecast BTCD dropping to 20% or lower by late 2025. D. Regulation and legal updates. Commodity status. New legislation in the U.S. may soon formalize the legal classification of cryptocurrencies, specifically confirming Bitcoin as a commodity. The ruling in the SEC versus Ripple case also strengthens the notion that XRP and potentially other cryptos aligns more closely with the nature of a commodity. This legal clarity is expected to encourage further capital flow into the crypto market. 3. What's next? Market forecast. The path forward for Bitcoin and the crypto market hinges on several key factors. A. Technical analysis. Short-term risk. Due to the current position below $100,000 and the potential formation of a bearish head and shoulders pattern, there is a risk of further short-term decline. If selling pressure continues, the next strong support levels are around $90,000 and $83,000. Recovery potential. If the ETF flows quickly turn positive and Bitcoin can decisively reclaim its position above $103,000, it would invalidate the bearish pattern and begin its journey toward a new all-time high, ATH. B. Macroeconomic impact. The Fed and interest rates. The upcoming decisions by the Federal Reserve and the inflation data, CPI, will be the biggest market movers. If the Fed holds or raises interest rates for longer than expected, it will divert more capital away from risk assets, potentially causing further crypto market volatility. Inflation. If inflation data comes in higher than anticipated, investors may be reattracted to Bitcoin as an inflation hedge. Institutional adoption. Focus on ETF flows. Despite the massive ETF outflows, Bitcoin's long-term structure remains robust. Once market volatility subsides and the macroeconomic environment stabilizes, inflows could quickly return. The potential entry of large financial institutions like Vanguard could bring millions of conservative investors into the crypto market. Regulatory clarity. The formal legal classification of Bitcoin as a commodity and the expansion of ETFs for other crypto products like XRP, Solana will create structural demand in the market. D. Long-term forecast 2025 and beyond. Most market analysts are still adhering to their long-term bullish forecasts for 2025. Plan B and other experts are still predicting Bitcoin could be on its way to $100,000 or even $1 million. The post-halving bull cycle and increasing institutional adoption form the core basis of these forecasts. Timeline. The market may currently be in a consolidation or pullback phase. The next major capital wave could arrive in early to mid-2026, when the macroeconomic environment becomes more favorable and the new ETFs are fully deployed. Conclusion. November 13, 2025 marks a day of volatility and correction in the crypto market. Bitcoin's drop below $100,000, the massive ETF outflows, and Fed worries have created short-term fear. However, from a long-term perspective, positive developments such as the successful launch of the Spot XRP ETF, inflows into the Solana ETF, and the end of the U.S. shutdown maintain the structural foundation of the crypto industry. Bitcoin's high dominance indicates that the main focus remains on the largest cryptocurrency, and its stabilization is necessary before an alt season can begin. For investors, these dips could be viewed as potential buying opportunities, but it is essential to wait for the release of macro data and a reversal in ETF flows. The market's next move will depend strongly on interest rates and the trajectory of institutional capital. Would you like me to analyze the technical data for any specific cryptocurrency or find more news about upcoming regulatory changes?